Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Hey, greetings, and thank you so much for joining us. It's Macro to Micro Options Power Hour. I'm Samantha LaDuc, founder of LaDucTrading.com, and I'm joined by Hans Albrecht. You can find him at LaDucTrading.com/Hans. He's also in our Slack member workspace as one of our 10 contributors, offering up lots of options education, mentoring, and option related trades, both for alpha as well as overlay strategies for hedging. And the title of this particular talk, which we do, by the way, every Wednesday at 4 o'clock, is just, nobody wants any puts right now, right? So we're having a wonderful time if you're long the MAG 7, the Magnificent 7, or the SPY 10, in that they're doing nothing wrong, right? Apple's making all-time highs, Amazon, now Google, the quantum bug has absolutely hit and ignited that bull. Netflix, Meta, Costco, Walmart, which has been even part of the kind of concentration risk that we saw back in the summer of 2024, between that kind of May Nvidia earnings and the top, which was July 9th, before the yen carry trade unwind, created a big de-risking event in the concentration plays. And that's what's basically running right now. The market hotter and higher is NASDAQ 100. We've got Avgo earnings reporting tomorrow, likely puts a little sentiment nod into the semi space. That's one sector in this tech space that has not rallied. Quantum has been kind of taking the mantle, or the relay race, if you will. They handed it off to the quantum plays. And we'll see if Avgo beats and then Nvidia follows up, because it has been the one Magnificent 7 player that has actually been sideways. It's not fallen apart, but it certainly isn't going anywhere fast. So we'll talk about that theme because that's something we did last week, and we'll follow up on lots of the trades that support it, and then some other sector rotation views, as well as the some options education on portfolio hedging, something that has been a topic with clients recently, because we are kind of getting into the end of the year with potential shake and bake come January, February. But first, we have to get through FOMC next week, the 18th. Bank of Japan, not a lot expected there, but a 96% chance for a Fed rate cut next week. And then the options expiration on Friday, end of the year, and then we'll come back and hit it again. So let me turn it over to Hans and kind of get your focus of interest right now. Hans, how do you see the market?
So everyone's tossing out puts, and so we pulled back, and we pulled back through that collar strike. And I said yesterday, I was talking about how there should be some support in there around 625, 630. And sure enough, we got it, but we definitely got a lot of help from CPI, which was kind of a neither here nor there kind of number. And I think the market was a little worried that it was going to come in a little bit hotter than expected, and we weren't going to get our wonderful spiked punch bowl. And so I think this kind of keeps the Fed on track, and I think it takes some of the volatility out of FOMC, right? So we can see that they're pricing in.
Exactly, 96% chance. It's a done deal. They're going to have a 25 basis point cut. And so now the market will have to worry about what they're going to do in January. But that next meeting is January 29th. There's so much time to push that off.
So much time, exactly. A lot of data to come, even a little bit of data next week, and then FOMC. But at this point, it might be a foregone conclusion. We're seeing VIX down around 1359, 1360. I think it could drop a little bit more. So, we're holding on to our long puts in our December 15 puts. I've got some SVIX, some SVXY as a play on the structure, because you get that kind of beautiful contango picture in the VIX term structure. And so I think some of those plays still work, but the easy money's been made, right? So now we're down in this low vol environment where a lot of the kind of hard work has been sort of taken up by the big vol drop that we've seen since the election. And now it's just kind of the boring old option plays that pretty much are theta decay type plays. And if you want, you can definitely still capture some of these upside moves in. I mean, everything's kind of going, Tesla's going parabolic still. It just doesn't let up. It's on its highs for the day. All-time highs, I think we closed at.
Yeah, 414 plus was the price target that I had this year, because it's basically the prior high, 2021. It's already shot above. Google is shooting above. Yeah, there's definitely animal spirits here. And I just wanted to talk real quick about that CPI. CPI was flat which is very encouraging, obviously, for the Fed cutting. But it's also very interesting that shelter component was a major reason for its flattishness, in other words, as expected. So as that pulls down or makes up for the goods inflation that was hot, it kind of comes out as flat as expected. And that's actually going to be pulled forward probably another 2 or 3 months. So the expectation is that Fed would still have a path for normalization. So anyway, long story short, it could give the Fed, originally I thought we were going to pause in January, end of January, but now with this CPI print being flat on this lagging shelter component, which is falling, that will help negate some of the goods inflation, which will help the Fed to continue its normative rate cuts if they want, which is very supportive to markets. Long story short, just wanted to get that in.
It's all about the porridge being warm. I always like to talk about the porridge. It's everyone's going to think that's my favorite breakfast, but it is the market's favorite breakfast for sure, because we don't want things to get too extreme one way or another. And here we are, and the market's enjoying it. And I think that sets us up for potentially another run higher. I think we do have this there's a lot of gamma, as we like to talk about in the options world, which is heavy duty positions between that 60.25 and 6,100 levels. If we can push through 6,100, it's hard to believe, but this can even get more parabolic. We talked about this a little bit last week. This can get even worse to the upside for the bears, basically. A melt up that would make Tom Lee blush. Even Tom Lee is what's funny, I looked at a lot of the targets for 2024, and they were sort of 4,800, 4,400, 4,600, and here we are at pushing 6,100. Now everybody is raised, everybody's kind of jumping on board. Even David Rosenberg is kind of throwing in the towel a little bit. Like long-term bears are going, you know what? Yeah, he literally said, I don't know, but there may be new math to the way things work, literally new math. And so that's basically,
the falling dollar that he should know a lot about, but it is ironical. But yes, we had two themes last week. One was I'm bullish, a growth rotation a la summer 2024. And we could trigger a melt up that would make Tom Lee blush. So here we are. The Qs are pushing. I still have 548 for the Qs because I have to keep, revising upward. Every target that I had from November of 2023, right? And then it hits, and then I have to go find a new target. And now I'm at my next target. So 548 it is for the Qs.
All right. So let's do a little rundown of the sort of volatility backdrop here before we get into a couple of interesting things. So here's your realized volatility, plunging. And every time we get here, boom, we take off. So this level here is kind of that 5 realized, which is just really almost no movement at all. That if you look at S&P options, we're pricing in like almost no movement. A few weeks out, we're pricing in like 50, 60 basis points. It's very, very little on a daily basis. So, but I mean, this is what's happening, right? There's no fear at all. We're just tossing puts out the window. We're getting massive flows. Look at this, 141 billion worth of inflows over the last 4 weeks. So this isn't just, I mean, if you're a bear, you really have to sort of stare at, at this kind of stuff and sort of go, wow, I am trying to push a boulder up a hill here. I mean, people are piling into markets. This is one of the most astonishing charts here. I mean, we talked about parabolas. So all these stocks going parabolic. Look at sentiment towards future stock appreciation. Absolutely parabolic. I mean, this is going back to 1988.
Those are surveys, and people feel really good when they're making money in the stock market, and the hope that they have fewer taxes on that moving forward under new, administration. But it is a survey, so there is a bifurcated K-shaped economy, no question. The wage earners are not feeling that, so the wealth owners are.
Right. People who don't own stocks are not sharing this sentiment right here. They're hearing, oh, inflation's under control, but everything I buy is 45% higher than it was 4 years ago. So there really is this bifurcated world out there. So, definitely being sensitive to the fact that half the population isn't feeling this kind of exuberance probably out there. But our job is to look at markets and where to make money in markets. So, good or bad, that's what we do here. Monday really kind of threw a wrench into it. We had this 3.4 sigma shock in the long term, in the momentum factor, which is like, a massive move. Like we're showing this bell curve here. So don't have bad sort of flashbacks to math class, but this just means that kind of move doesn't happen very often. But bounce back we did, right? We blasted right through those levels again. And it's just too strong. We see this gamma that I'm always talking about all the time. And this is why people need to sort of at least pay attention to this. Even if you're not an option trader, the tail being the dog now and derivatives really being a big part of everything, $10 billion worth of gamma per 1%. You can't see it here. Oh, there it is. Per 1% move. So that's very supportive. We have these massive positions out there. A lot of that is going to start to burn off next week. I think I heard it was maybe the biggest expiry of all time next week. So we're going to have some massive, at least on the index level, massive positions are going to be burning off. And so that's going to sort of play into the second half. Seasonally, December can be very strong seasonally in the second half. The first half is a little bit ho-hum, right? But the second half, and that coincides with December, January, often. Yeah, and these are big positions, right? So think about when they list options a year or two out, they're almost always around this time of the year. So when we get close to those positions expiring, they're always huge expiries. And so we have big positions baking off and disappearing. And of course, we don't know exactly what's going to be rolled and pushed forward into new positions, but there is the potential for more kind of unpredictable movement in the second half of December when everyone's kind of trying to take some time off and liquidity kind of dries up a little. So, all bets are off and that goes in both directions. That could be downside as well as upside, but anything can happen.
Let me show one bearish chart that I came across today, and I know that bears will find the bearish and the bulls will find the bullish, but I did find this particularly interesting since we're talking about the flows coming into not only the end of the month, but also the quarter, right? And the leaps in January, etc. And that's typically after the January leaps the gamma comes off that board. That's very large. January is huge. So after we get the weekly on this next week, the quarterly end of the year, and then the January leaps, we really, I think, will set up for a correction. But that's because I think there's going to be this rollover after FOMC on the 29th. Now, this is just a chart that I grabbed similar to what you just had, right? Which is, okay, maybe we've got a little bit of a warning here. This is Sentiment Trader put it out. There have been more declining than advancing stocks in the S&P 500 for 7 straight days. And this is as of 12/10, so yesterday. The index is less than 3% off its peak, and that's happened only twice before in the past 25 years. And the reason I mention that is because if my market thoughts that I write up for clients in my live trading room notes, I've talked about how since December 2nd, there has been net selling underneath the surface. So breadth is one thing that I look at. I can see clearly the growth rotation. I can show you those two key charts that I showed last week that I keep showing every week. But then I can show underneath where the RSP to SPY, for example, those that are equal weighted, the SPY 490, not the SPY 10, are absolutely not participating in this breadth expansion. So this is one example where net selling has been picking up underneath the surface since December 2nd. That's always an air pocket of risk waiting to happen. And also why I see the FANG stocks picking up, right? The money is it's congregating into the biggest mega cap tech, biggest moat plays, but that's dangerous in time. It's unwieldy, just like we had in July. So this is Sentiment Trader saying the index is less than 3%. This has only happened 3 times. Just so happens to be around that, 2000 high and, back here before we had the COVID, the 2021, pullback of size. So sometimes these can actually rhyme. And it is one way that I tell that the market is starting to get a little bit toppy, but we're not there yet, right? It's not a timing tool per se. It's definitely a warning. This is the chart that I showed last Wednesday and the Wednesday before that. And basically it's saying we're still going to get a growth rotation. And literally, this is a ratio. Okay.
I remember you've been showing this for months.
Every single week.
What a breakout. Yeah, what a breakout there.
And this is what happened basically post Nvidia in May of 2024. Again, they had a really big surge, but the point is this move from early June until early July, this is on a daily, by the way, was parabolic. And so just so happened, I happened to be doing a webinar with Craig, and it was on the 9th, and I warned, be careful. And then we had the yen carry trade come in, oil fell, 10-year yields fell down to 3.6. We had the August 5th reflexive bounce. I was on vacation, you covered the trading room. Anyway, this is that big, huge move. And so this is what I've been talking about. I think we're going to have a rotation, or what I call that, the rally a la July 2024, summer 2024. And this is exactly what's happening. So where it stops, nobody knows. I'll start to get a little bit of a feel, but that's extended. The other chart that I showed you was...
Is that so?
This.
When you're concerned about MAG, Samantha, is that that's kind of a rush into these balance sheet heroes, as I like to call them, where you can really kind of safety in names like Apple, even though
Yes.
Apple was kind of slacking off today a little bit, but compared to the others, but that's kind of a flight to safety in a sense, right?
It is 100% concentration risk. So that can imply, yes, a kind of a safety. At the same time, it's a source of funds. I can see that there's net selling underneath the surface for the other guys. So the NYSE, the small caps. This is definitely not a Tom Lee rally in small caps. You know how I feel about that. but this shows me when growth is going to absolutely overtake value. Value as defined by, you can't really get going in financials or insurance or metals and mining. I don't mean gold and silver. I'm talking XME, XLE, energy, XLV, XLP, XLU, XLF, the stuff that is value in the sector rotation world. Okay, but this is clearly XLK. Semis are not taking part of this right now, right? They're trying to get up and go, but they haven't. But this is the MAG 7. So this is the one that I show on the weekly, which I've been showing since January of 2023. Remember this one? Where literally NASDAQ, this is not NASDAQ, this is just 7 stocks, and it's in a ratio, it's in a formula. And I show this every day as well because it shows the strength in MAG 7. Anyway, long story short, from July of 2023 until Q's just hit $524, we rose up 100% gain in NASDAQ 100. And it's in large part because of the cap weighting in Nvidia and the MAG 7 plays. Actually, I would say even Avgo and Walmart, they're all part of the top 10 cap weighted in SPY. So this is broken out. Like, remember I said this was my target, the 1618 fib retracement level on a weekly, because this is what this ratio represents. It's a weekly chart. And this was the August 5th. Remember that right here? Incredible short covering rally. And then we went sideways for a while, kind of stuck in the mud. We did a little talk last week going, okay, it's kind of molasses. And then boom, things started really happening. It exploded higher. And they broke through this level. So that was last week. And here we are. That's the parabolic.
That's without Nvidia, right, Samantha? That's without Nvidia. Isn't that amazing?
Exact point. It's without Avgo. Avgo's been going sideways, semis in general, but Avgo specifically, Avgo has earnings tomorrow. If they beat, Nvidia is going to come up, out of this 136 where it's been pinned, and the inverse is true. It'll be a sentiment tell, but the point is, with Apple all-time highs, and now Google all-time highs, and Tesla at all-time highs, and Netflix and Meta and Microsoft, oh my, we really do have the story of Goldilocks for the market in general, but it's really disguising the concentration risk, which will become unwieldy at some point. So this is the only reason why I keep showing that over and over and over again, because it really does demonstrate my overarching point of.
Let me show you something, Samantha. So this is you don't tend to see this in big cap, but this is a whole new world. We've seen some crazy stuff in Nvidia as well in terms of the skew, in terms of the magnitude of moves that we can see in a $3 trillion stock. We didn't think that was really possible, but all that is possible. And so you're seeing Google, it's kind of breaking out, and guess what? It's starting to go parabolic. It's starting to act like a Reddit, like one of these crazy stocks to some extent, not to the full extent. And look what's happening in the options. We see this typically it's fairly normal on the skew side. So anything above this line here means that puts are more expensive than calls. So it's taking a measurement of out of the money calls versus out of the money puts. So these are always fun charts to look at to kind of see, well, where am I getting value? If I'm a call seller, am I getting relatively good value versus puts? Is the skew working in my favor? Or if the skew is the other way, then maybe it makes sense for me to do something different. And this is one of those times where they're pushing into Google. Look at what the Google skew typically is. It's typically kind of like inverted. I mean, this is normal, right? Normal, I would call it. The puts are more expensive than the out of the money calls, and these are the at the monies in the middle. What you've got suddenly is yesterday you started to see people get a little interested. Eyebrows were raised as Google made that first initial move. And then today, volatility actually exploded higher. You don't usually see that with a big cap stock that's starting to move up. But the move was so alarming, catching people off guard. I see these things, and that in itself kind of makes me a little bit skeptical. And not for tomorrow, not for next week, but these are not kind of natural things happening. And look at how that's playing into the option volatility. Upside call skew getting pushed way up versus what it normally is. And so this chart above here, it kind of shows you, well, puts are normally more expensive. Look at the calls. They've exploded here. That rarely happens. Back in March, we just had a little bit of calls expensive versus puts. But this is going bananas. And that to me is telling me, I mean, you can interpret those kinds of upside call skews as either if you see that before a move, that's a sign that something might be brewing and going on, right? So that could be a premonition of like a gamma squeeze or something like that. But once you see something like this after a stock has had a good run up or a significant run over a couple of days, it can show a little bit of exhaustion. But the fact that people are really reaching for upside here shows to me a little bit of pain. Like a little bit of pain, maybe shorts are rushing in to protect themselves. Like this is a bit wacko type stuff you're seeing in a stock like Google.
Can I show you something? Because I want to talk to this Google one in particular.
Before you do it, Samantha, which by the way is actually interesting. So if you own Google, this is a chance for you to go, you know what, those upside calls are a little bit richer. And so I was telling some folks today, some members, I said, listen, it's expensive. I still think you want to wait and see where Google kind of lands here because it's acting so crazy that maybe we fly through 200 and I don't want to get in the way by capping my upside too quickly. But if I see this market kind of simmering a little under 6,100 and I see Google kind of calming down a bit, which it may not do because it's starting to approach all-time highs or hitting all-time highs, then I kind of want to slam out some calls going into the sort of 3-week period of calm and maybe grab that little bit of extra income. Sorry, go ahead.
Take a look at Google on the weekly chart. I know it's very dramatic, okay? But let me just kind of back up a little bit. This was earnings. Remember, we actually talked about that because it went right into that gap fill, which was fascinating. It did a lot of back and fill. It even had an antitrust worry, or I should say investigation on it by US. And then it just literally hit that 200-day, which has been a fabulous place to get into Google again because of that 200-day support. But the point is this news right here, where it gapped above that daily gap, the earnings, and where it obviously came up off the 200, is in large part really a fundamental shift. So I have a client who actually talked about this yesterday and again today. We had a DM. This announcement, right, by the CEO of Google saying, introducing Willow, state-of-the-art new quantum computing chip, breakthrough that can reduce errors exponentially as we scale up using more qubits, or however you pronounce it, cracking a 30-year challenge in the field. It's revolutionary, right? So the client I've had for years said, I've owned Google for 10 years. I'm buying more today. He said that yesterday. So believe me, that's not his only. He's very, very active manager, trust manager. This is something where he's like, this is revolutionary. I'm buying more of this Kool-Aid. So he hasn't bought any in 2 years. So the point is, this is definitely one of the major reasons, and this is by a conversation with Elon that happened to be, I grabbed this from Twitter. So the fact that this has run up so strongly, 11% in 2 days here, and it's ironic because for the client, I had this 193.60, let's call it 194 as a price target. If you kind of go back, because you know me, I love to go on a monthly. I throw a fib on it from peak to trough, 2021 down to that, 2022 October central bank intervention, and the 2023 everything changed and NASDAQ went higher kind of thing. This has been literally a fib extension of 1618, and it poked above there today. So yes, this is part of the concentration.
It's a sea change. Sorry, it's a sea change. He feels it's a substantial change. Yeah.
He's seen as a sea change. So very excited about AI. The next level is quantum. Quantum also might be taking some of this money flow from Nvidia, for example, right? So this is the new cool kid. Actually, it's the old cool kid, but now it's really, folks are off sides. So this is just an example where he literally said, I've owned Google for 10 years. I haven't purchased any in 2. I'm buying some today. And he said that yesterday. As an example.
A joke today. I sort of said, well, maybe quantum becomes the new catchphrase, right? So I remember AI was like, boy, if you didn't mention AI, you're gonna be fired as an executive because your job is to say AI as much as you can. I don't know if quantum becomes, because anybody can say AI. I can say my toothbrush has AI, right? But not everybody can say, well, we're integrating quantum into what we do. So maybe it doesn't have that kind of usefulness in a way as a narrative. But
there is, by the way, a quantum ETF. It has already broken out, and because I'm not one of the cool tech kids, right? It was actually Mike, our live trading room coordinator, who spotted this early and said, hey, quantum is breaking out. And with it, IBM, we later found Google, Honeywell. I thought Honeywell made corn syrup, but anyway, apparently. So he started like assembling a list of the quantum related plays, just like we did for the COVID vaccines, just like we did with AI. So these things have, a momentum that are not just the plaything of day traders, but also long-term investors. So just like the power producers within the utility space. Yeah, so there's nuclear. Anyway, there's definitely a theme. There are many themes that are going on right now. They're all kind of coming together and they're very exciting. What's going to be the theme for next year? I don't know, but that's just to kind of touch on that. Quantum is taking a little bit of that banner of the AI hope, and Google is definitely rolling out the rug here for the red carpet for investors to jump on.
The quantum, I don't know a lot about quantum. I mean, this sounds like the promises are incredible. All I know is that the cat can be in the box and outside of the box at the same time. I don't know how that's possible, but the cat can be in 2 different places when it comes to quantum. So I'm impressed with quantum, if that's true. I'm impressed that a cat can be in 2 places at once. So I have a lot to learn though about quantum. So what I would say though, when you look at, and I would say definitely don't bet against this market. I mean, you can take sort of measured, maybe do some broken wing butterfly plays. I'm thinking maybe something on Tesla is going to get a little extended here. I might just set something up to the downside to play. There's a massive wall at 400, which was allegedly some sort of resistance, but at this point it's going to be support, right? There's a huge position there. So I wouldn't be surprised if we get some sort of magnetic move back to that level once the animal spirits kind of wear off just a little bit after this big run we've had. So I'd be looking at some sort of downside fly in something like Tesla. That might, very limited risk, right? So I see people doing things. I had a prospective client reach out to me this week and he's like, oh, I made all this money and then I got destroyed. I lost like 400 grand on Coinbase. And I'm like, well, what did you do? And he's like, well, I was selling naked calls into this. I said, oh my goodness, no, you have to figure out measured, limited risk, smart ways to get short. And one of the great ways that I like is, using just a simple old fly or a broken wing. You break that bottom part of the fly and you so that you don't, so that you're not right on direction, but you don't make money, which is the worst part of a fly or a calendar. You can potentially not make money, and even though you're right on direction. But in something like this Google here, like I wouldn't bet against more parabolas. I wouldn't mind seeing another sort of 50-point drop and then, kind of set us up for another sort of drift higher. And you could look at something like Google, I mean, making all-time highs here. Vol has jumped up a little bit, so I wouldn't say you just kind of rush out and buy up, out of the money calls, but you could pick up something like, 200, now my markets are kind of crappy now, but a 200, 210 for a reasonable amount of money, just for kind of a pop. Like I wouldn't marry the trade. I would date that trade because you don't want to stay in there too long, just in case things turn down. But I think you could kind of look around this market and sort of, the opportunities aren't as good as they were. You remember when we were talking maybe a month and a half ago, we were sort of looking at that downside and we were going, boy, they're underpricing upside and everything. And guess what's happened in the last month or so? They've completely pushed up that upside in so many names. That Google example I just gave you, a perfect example of that, of just everyone going, wait a minute, this isn't your typical sell calls and hammer the upside. You know, I used to manage all these funds. That's what you did. You just sold your 10,000 calls and smashed down that upper call skew, and then you know the market sort of behaved in a more predictable manner. Now everything's a parabola. Google can turn into a parabola as well. So you know, I think there's still some meat on the bone for some of these plays that have lagged a little bit. We've seen Microsoft catch up a little bit. Google, I think, is interesting. That could have a little bit more. So, you know, there's opportunity out there. But let's take a look at Tesla, for example, here. What if I picked, now with these flies, you kind of don't want to go out too far. I've seen people kind of go out to like March, April on a fly. You're not going to really get that. What you want is gamma when you're trading these things. You don't want, it looks good on paper if you place it sort of at the 3-4 month out duration, but it's not going to give you that. It's going to give you very little delta. And what you want is a little bit more reactivity. So with these things, the temptation is to give yourself tons of time. Don't. You have to kind of, you know, you have to sort of stick your flag in the ground and say, okay, I believe this is going to come down. So if I picked like a January, that's a lot of time. I could maybe go and pick up oh my goodness, I have to go up so far now. Look how these strikes go all the way down to 5 on Tesla. When we were talking about, you know, these options are listed like years ago, we have a 5 strike on Tesla in January from when these were very, very long duration options. Look at that. We jammed it up right at the end of the day. So you could sort of pick up maybe a 415, sell a 4, you know, it's a little bit close, maybe a 415, 400, and then buy like a 390 or something like that. And let's see what that sort of prices as. Probably a little bit too tight. Maybe we could I'll probably wait for it to go up just a little bit more. Maybe do like a 425, 400, 390. So it might look like something like this. So on a 1 lot, leave it as a 10 lot. On a 10 lot, you're going to buy the 425 put at 33 bucks. You're going to sell 2 of these for 40 bucks. So that's going to put about $21. So you're going to put about 8 bucks in your jeans there, and then you're going to spend a little bit extra. So you might spend about $9 on something like this, 8 to 9 bucks. But if it comes down, we could see a little bit of that volatility come back down, because look at what's happening to volatility on Tesla, right? So this is a new world here we're in, where things, even huge companies, are going up and the volatility is following it up. And this is because of this sort of you used a word earlier on Google, alarming. That was it. These are alarming moves, right? We're seeing alarming moves to the upside, and volatility is going, oh my goodness, what do you mean we're going parabolic on this stock yet again? We actually saw it on the whole coin complex, right, recently, where you get to this level of parabola, and the vol market doesn't know it. It sort of goes, well, I don't know where this is going. This thing could go to $1,000, go to $2,000. I don't know. I'm scared. So volatility just starts to price in crazy possibilities. And then all it takes is for things to kind of come off a little bit. And so I did a little video of this earlier, and I said, interestingly enough, take a look at, I wanted to show you guys this. We saw, even though some of these names have rallied in the coin complex, for example, or in MSTR, in some of those names,
NASDAQ 100 that was announced today, MSTR.
Okay, there you go. There you go.
Negative earnings play, it doesn't matter. It
doesn't matter anymore. No,
yeah,
no.
The game is on, as you said.
It is on. The game is truly on, and it's a very difficult thing for traders to deal with now, because you're kind of like Rosenberg said, there's new math, right? There's just new math, and it just smells like that old saying, sometimes, you know, this time it's different, and it really never is that different, but it can stay different for a long time. And so you have, for example, I thought it was interesting today, you saw a huge move up in some of these names. Here's MSTR, and here is coin. So this was a great lesson in volatility, because typically what we see when these stocks start to go up again, we see volatility rise, because they act the inverse of how, you know, normal things act. Maybe not Google and Tesla these days, but in these parabolic type potential moves, things that are flight to safety, things that have this explosive upside potential, you usually see volatility really take off when these stocks do really, really well. That's starting to get tempered a little bit. The volatility, the red line is yesterday, and today we saw just most of the day was kind of sitting at about the same implied volatility level as yesterday, and it pushed up just a little bit towards the end of the day in the afternoon. But basically, the market is saying, okay, I'm getting more comfortable with this range. So we had, I think it was Gabe in the chat, if I remember correctly, was asking a little bit about that Bitcoin 100,000. And I've been saying this for a couple of weeks. I've been saying, I just feel like that 100,000 level is like a bit of a magnet. It's just probably going to stick around there, maybe go a little bit higher, maybe go a little bit lower. I thought maybe we'd tag that 91,000 overnight yesterday, and we didn't. We didn't even get that low, and we bounced back again today. And so you're seeing this compression of volatility as volatility markets go, okay, now it feels like we're in a range here. And so I think there's still a little meat on the bone. I've been telling people you could sell cover calls against MSTR, against coin, against this whole complex, because you have this nice steep upside skew, a bit like we saw in Google, but this is a bit more normal in a name like this. This is not atypical for coin or for MSTR. You're going to see upside skew reflect the fact that people think it can explode higher. And so this is kind of a nice name. If you feel like I have, now I've been feeling like this for a couple of weeks, at some point, volatility is going to drop far enough that I think we're going to flip to the other side, where being a some sort of long option play is going to become where the edge is. There's not a ton of meat left on the bone at this point in being short vol, but I think we still stick around probably at least until December expiry. If you wanted to get crazy, you could say maybe Bitcoin sticks around 100 grand until almost inauguration, maybe into January at least. So there's still a little bit of money to be made. So if you really are a believer in these names and MSTR and Bitcoin and Coinbase and things like that, not a bad way to pick up some vol. The other day I was looking, you could get 11.5% for a call sale about 11% higher than where we were trading for about 30 days work. So that's pretty good. You know, a 22% call away return is pretty good in a holding like that. So the volatility is still high enough for that. But I just thought that was kind of interesting. It's not being as reactive, which is kind of ironic, right? Volatility isn't being reactive to MSTR going bananas to the upside, but it is being reactive to Google making a big move to the upside. We saw a huge jump in vol on Google. So it's, you know, dogs and cats living together, right? Mass hysteria, as they said in Ghostbusters. So it's just crazy stuff happening these days.
I still have for Bitcoin 130, 135 from that kind of mid-October time frame. So however clients want to play it, there are miners that, you know, make sense and those that don't, but MSTR, you know, is mostly a NAV differential play and just a celebrity CEO, and I don't know what else you want to call it, a meme, a cult. But IBIT is the iShares Bitcoin Trust ETF. Have you ever played that? It's got some pretty plentiful options that have been exploding in that particular Bitcoin proxy as a way to kind of play as well. This consolidation on our way up to that 130, 135 area. I am not obviously a pusher of Bitcoin, Ethereum, crypto, or any of it, but it is very tradable. We've talked about that. Coin, Hood, which is a little bit different because they're also in the transaction business of brokerage. But the other one is the Square, PayPal, Tesla. They all have some Bitcoin on the balance sheet, and they've all been doing extremely well for other reasons. SaaS reacceleration theme for the Square and PayPal and the like, but coming up off the bottom, basically that mid-tech space, the IGV components. But long story short, there has been a continued theme in select software and in Bitcoin and Bitcoin proxies, and they took a little rest. But Mara, is still hanging in there. Ethereum looks like it wants to do a double, kind of like the Bitcoin broke out of a big old wedge. Now ETH looks like it wants to. But that's also worrisome because that is rerouting, diverting money that could be going into commodities, for example, that are going into the speculative assets of BTC and ETH. So I'm not really a proponent of its value proposition, but I am absolutely aware that there is a lot of momentum in playing that trade. And so it's still in play. Long story short, it's still in play and commodities are not.
Scary. It's scary. I mean, I think, MSTR could end very poorly one day, but we don't know when that's going to be. I mean, people are paying 2.5 times or whatever it is, the underlying value in the stock. Why wouldn't you just buy, actual Bitcoin or IBIT or something like that? But I guess it's like you said, it's a belief in this charismatic leader who just can spin a story like it's no one's business. So here's the IBIT right here. You actually see that again. This is a bit like the other ones I showed you. Even though it did great, the volatility kind of stayed the same. So it feels like the Bitcoin complex, at least from a volatility perspective, is starting to get very comfortable with the idea that we're going to stick around 100,000. So that's what I've been saying for a while, but finally the vol markets are going, okay, we're going to sit around here. Now that means at some point, maybe that becomes a contrarian indicator. When the market gets too comfortable with 100,000 and the volatility gets low enough, that's going to create some opportunity for us. Right now, if you own IBIT, actually sort of prices nicely for even just like a collar or like a put spread collar. You could sort of sell this expensive upside volatility or skew rather, and buy some downside puts and kind of create a little bit of a protective structure there in case you're just a little bit worried. And you're still going to create a little bit of upside, for example, or you could use that upside call to buy a downside put spread. So your capital is going to be much more efficient. You're not going to create the full downside protection that you would with a single put, but if you spread it out, you're going to be able to create something for less money, some sort of protective structure for a little bit less money, and maybe even put a little money in your pocket from the call sales. So that's where a caller becomes has that little added kicker of, well, maybe I can turn this into a slight yielding type play as well as a protective play if I can structure it nicely. So there's some fun stuff you can do if you kind of know where to look. But I think, at some point, I think there's going to be an opportunity to make some money on the long side of volatility here again. We can see we're still fairly high. I mean, IBIT hasn't been around long enough to really give us much of a history of where volatility should be in a name like that. MSTR maybe is a little bit of its own animal. It's definitely beta Bitcoin, but you can see it's come down, even though it's still swinging around 40, 50 bucks. The volatility keeps dropping. So I'd like to see it kind of in the low 30s. And then I'm going to start getting a little bit interested there.
All right. So I have a question on, these are the long plays. And I know I want to go over a few more of yours that are, that we talk about, including one that isn't doing great, right? So there's lots of ways to make money in this market as it relates to the concentration risk of the FANG stocks, Mag 7, whatever you want to call it, the Bitcoin and Bitcoin proxies. There's no question about that. Trend long retail favorites from those who are positioned in Walmart or Costco, which is also a safety play, but it's also, an incredible trend this year. To BJ's and TJ Maxx, which are two of my trend fave for a few years for that client know. Think of it as like the baby cousin of Costco. But there are and then the quantum plays that are new, the AI that's still hanging in there. Gold and silver is still trend long. We've had a little, bump higher into this FOMC, which was a bet that I had last week. Parabola is taking a break. So there are still a lot of plays that are parabolic, but they're softening. So we talked about MSTR a few weeks ago. It's still holding the 21-day. It's hardly what you'd call weak. But there are not, this is something interesting. So let me just share something because I found this.
I think the parabolas are on that note, I had a long Reddit position and I
Yes.
missed the top the other day. I missed the top, but we rallied back a little today. But I said to myself, you know what, I'm not going to be greedy. I'm not going to wait for that top again, because if the parabola has, if we're starting to come down the other side of the mountain, I don't want to get stuck long calls in this thing. So I got out. I made a tiny little bit of money. It could have been a really nice big win.
But
Unfortunately,
this is an example where you, and I remember this, we talked about this weeks ago, this had earnings and you were not in this pre-earnings. You grabbed it here at 104. And I thought to myself, you don't want to wait for it to digest. You're like, no, the earnings report was awesome. And obviously it went up, to 180. So that's a phenomenal trade. And that's what's been going on in some part with these. This was an IPO that didn't have a lot of data, but we'll call it the tech, right? The tech ecosystem, not an AI, not a quantum, just really, really excited profitability play that you were in. Now, if I look at something like a United Airlines, really not sexy until 18 weeks ago. So 18 weeks ago, August 5th, everything looks like this. It stopped going down and started moving up, right? But this is different. This is 18 weeks of consecutive green closes. That's called a freak of nature. Now, for all the fundamental reasons, you can say, yeah, travel's been awesome. The point is this big pink line is where we fell February 23rd, which was a Sunday evening, COVID 2020. So it took a long time for this play to get back above its gap down from literally February of 2020. We're talking years on the ground, and then all of a sudden it shot up like hot fire flames. And I mean, through it, is there shorting here? Not yet, but we finally have our first week of pause. So that's that's another example, not a recent parabola, but one that's been in the making since August, a beautiful, push higher and trend, and now it's in digestion. So I looked at this, and there was another one that came up on Monday because I spotted this type of action that started to turn around, right? That's Friday, and then you got some Monday, and we're digesting a little bit, but there's some selling that's coming in. FICO was another one, this big, huge push lower that's been an unmitigated move higher. We've had some other names that people don't follow, but basically stuff that's rolling over. Palantir finally hit 79, which was my year-end price target, and it did a big old 180 and has softened. So these are parabolas, these are extended plays, these are whatever you want to call it, but they're now in digestion, and Mag 7's still doing fine, except for Nvidia. We'll see about that. But the point is, this is the option question, right? Folks that are either staying long this parabola, but also now expecting, at least I am, some mean reversion trades, at least back to the 21-day, right? I mean, even MSTR did that. So here's MSTR, and here's that 21-day down here, right?
Yeah, no, even Coke went on a run like that, like some, sort of formerly boring safety type plays, and it pulled back a lot too. So I think it's if you've been patient this long, congratulations, but I definitely think this is a time
profit taking in the house.
Yeah.
But then I saw this, which was interesting. This is bespoke, and they said crazy stat. All 26 of the Russell 1000 stocks that were up 100% on the year, this is through last Friday, we're down today, and they're pointing to the 9th, which was 2 days ago. Okay. And they were down on average about 5%. Now, it was interesting because in the trading room, I had seen a bunch of these without knowing this stat, right? That these were basically the parabolas that were digesting. Okay. So this is how I was looking at it. The app, the Palantir, the Spotify, the United Airlines, right? The FICO, etc., the FIX. So these were things that I saw in the room that were undergoing profit taking while Apple and Tesla and, whatever, Google, oh my, we're running higher into the hot sun. This has, this is like a nice little shopping list of potential shorts. So,
it is, yeah. I like that.
Not a trend reversal, just a reversion to the mean, just a soft swing or pullback down to what I call the mean anyway, which is the 10-week. So if I'm looking at United Airlines, for example, this is the 10-week. So we're not talking a huge amount, right? This is not a big drama. It's about $88. but from 98, that's $10. So
Yeah,
this
and
is
it
what
could
I'm
be a drip down, right? It could just kind of be a slow sort of drip, 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 drip. It may not even be violent. It may just kind of be, down the steps.
That's what kicked in this week. And I thought that was kind of interesting to highlight.
That is kind of interesting. I mean, well, look, I mean, you always have a choice of getting out of a name. If you don't want to, I'm looking at the UAL option premiums. They're starting to get a little bit higher, but I will say that we do have an earnings report coming up at some point here in January.
January
Is it in January?
27th. Yep.
January. Okay. So, maybe we're starting to see a little bit it may not, that may not be a big part of it at this point, but it's up there. So I think the skew looks pretty flat. You could sell some calls. You could be a little bit more aggressive, right? So what I like to do is when I've had a good run on something, I'm not selling, a 15 delta call, which is going to be so far out of the money. It's really not going to move the needle for me. It's not going to give me very much premium, and it's not going to give me much hedge value because if I'm getting, a dollar for this call that's, out a month, it's not really going to do much for me. So, and that's one of the big complaints with the cover call sometimes is, well, it's not going to really giving me much. So, give me something better. So I would move that strike down towards the, closer to at the money to get a little bit more time value. And then you might even go into my sort of cash machine strategy, which is you could get a little bit in the money even, and you could kind of sell, something sort of a little bit in the money, give yourself some premium, because when you start selling in the money, you actually start capturing a little bit of put skew, assuming the put skew is a little better than in a particular name. It may not always be, as we've know full well from our analysis of different names. But if you go a little bit in the money, you get that little extra bit of a hedge. Would I go out and just kind of buy puts on this thing? They're not very cheap at this point. So if I look at UAL, maybe I could buy like an 80 put for $2. That's not very cheap for a February. I mean, we're talking about, a little more than 2 months out, paying $2, almost, more than 2% of the stock price to pay for protection in my holding. That's a lot, but it's reflecting a very, very big move in this thing, right? So you get big moves in stocks, and you're going to have to pay up a little bit for insurance if you want to buy it. You could spread it out, right? So you could look at when option pricing gets a little bit higher, that's when you want to start spreading, right? So you want to kind of go, okay, I can buy one put and I can sell a further output. It's not going to give me full protection beyond a certain point, but presumably you don't think this stock can go back to 50 or 40 bucks. If you do, you probably just want to get the heck out of it. But if you're more measured in your hedge thesis or your pullback thesis that may or may not happen, then a spread can kind of do a nice job for you. If you bought like a 92 half in Feb for 575, and then maybe sold an 80 for a couple bucks, or a 75 for $1.20, $1.25 if you could get it. Now, you've got a little bit more hedge value there. Still not inexpensive. So I would say, on a name like this, I would not get bearish necessarily. Your point is well taken. We had all of those names down this week. Maybe this is a turning point in names that have done that well. So I would sort of get in there. Volatility's high. You are facing the prospect. If you sell a cover call, you're facing the potential for the report to be fantastic. And anything can happen on a chart. On a chart like that, I mean, there may be a whole bunch of people with the same idea thinking, boy, this has gone too far. And then who knows, it jumps another 20 bucks. I mean, anything can happen.
It's interesting that you're talking about these option tactics. This happens to be a December 125 call, which is look at the beautiful premium. Very, very unlikely it's going to reach 125 by options expiration next Friday. But here's your in the money 92.50 call, right? Also really nice premium that you were kind of referring to. And then you're right, a February, for example, and these are just open interest. This is what's just come in for volume today. This isn't an open interest. It's just ironic that I'm looking at the volume of interest that's come in on these plays. And I don't know if they're buying or selling, right? This is just new contracts that have entered in on this issue. And then there you go. There's an 85 put, which is right about where I talked about this 10-week being, right? So the 10-week is literally 86.55, and that put is $3 and change. So
Well, I mean,
I'm watching it. Let's just put it that all of those
yeah.
have started to
Well,
soften.
they're getting
go into
expensive.
distribution.
They're getting expensive, aren't they, Samantha? So there was at one point where I was really kind of bullish Amazon, and I was kind of going, I put out a video on it and I said, Amazon really doesn't trade much more expensive than Walmart. And I said, this is the name I want, in my view. I just thought, Walmart's just had too much of a run. And in that time, not that I'm like Mr. Crystal Ball, but it sometimes just comes down to just plain logic. Where is your torque gonna be? And in that time, Walmart hasn't moved and Amazon's up 12%. So it ended up being a good choice and a good kind of pair trade there. But we have gotten to that point in markets where I think fund managers out there who've held something like UAL and some of these sort of plays that have gone parabolic. I mean, sort of stocks that are not supposed to be all that exciting have gone parabolic, and they have to be looking at these things going, wow, maybe there's somewhere better to deploy my money. So there's that, right? That's the market for you, right?
And they're not deploying it in the safety of XLV, for example, which has a huge headwind of big changes in the healthcare sector, biopharma space. They're not deploying it in energy. This is just a sideways grind. They're not, XLF has already run its incredible course, and the yield curve is still cheap and steep, but it's definitely participated with the Qs. But I definitely want to kind of call that out, that Eli was a concentration risk up until that July big shake and bake. It recovered, and now it's toying with staying under 800 again. Again, big changes coming in with new policies at Health and Human Services could have a big impact on some of these stocks. So yeah, they're
utilities aren't safe either, right? Utilities, are they? I don't know if you can hide utilities.
It depends on the utility. It depends. They are coming back in as well, but that's what I mean by this concentration risk is a source of funds away from the defensive plays. So that's all I wanted to say is correct. Even utilities are coming and softening with the others. So right now we're in a sweet spot. We've talked about it so far. We'll see what next week brings, which is options expiration. We'll be back here on Wednesday after the close at 4 o'clock. Again, we'll figure it out, right? We'll see what happens with Avgo earnings, Nvidia getting bids. Semis yesterday started to get really supported with option flow again in advance of Avgo earnings. So I definitely have my eyes still on semis and Nvidia. That's really going to be my cue, is when we get that semi rotation, then I think we're going to start to roll over. But I think we're going to be okay until at least mid-January and maybe even end of January for FOMC. Any other last words before we close, and wish everyone a great rest of the trading week, and invite you to all come back next Wednesday. Ask your questions on options. We didn't actually cover portfolio protection. We'll have to do that next week. Don't let us. Next
week. Don't worry. Yeah, we'll have a chance. It may get a little cheaper, in fact, but not that you always want to time portfolio protection, because that's something, that's assuming that when the market's going to sell off. But there are some interesting trades developing, and we didn't go over some flows. I saw some really big VIX trades go up, so some interesting plays. And we talked about how high the VIX, how high the beta is this year. It's very reactive. I think it's kind of a nice place to be. And we could talk more about that next week. But I think there's some very interesting things you can do in terms of protecting your portfolio.
I think that's where we will talk about for sure, because as the title, right, everyone hates puts at the top. We're going to start to have to think about them into the new year. But right now, everyone's just ho-hum. Happy holidays, everybody. And I'll wish everyone a great afternoon. Thank you, Hans. Again, you can find us on Twitter, also at LaDucTrading.com and LaDucTrading.com/Hans for his specialized program. Thank you, everyone, for joining. Cheers. Bye.
Subscribe to LaDuc Trading YouTube channel for more macro to micro options power hour and other content.